Last week we had the lovely Allison. What's her last name? I just know her as A Metaverse. Metaverse Allison.
Alexander.
Alexander, that's right. This week, and we all really enjoyed that time together, but I think we started that episode by even saying, guys, like, we need to talk with Allison and hear what's going on with her, but like, there's so much else going on right now that it's hard to keep up. So we've got Balaji's $1 million Bitcoin bet, right? We've got hyperinflation, and if we think the banks are coming, why are we chuckling? Because Jared, I thought you would have been about that life. So, like, do you think we're hitting $1 million Bitcoin?
I mean, look.
In 90 days.
I do, but not
90 days.
90 days.
Yeah, man.
No. But it's one of the best things I've ever heard because he's gonna get so many followers. He's hopping on just on Pompliano's podcast. He's gonna make the rounds. It's like coming out with a book. It's a tell-all.
Well, if you think about it, like, and I think Aussie, how much Bitcoin did you say this guy had?
He's got something like 10,000 Bitcoin.
So,
it's
like,
ridiculous.
So do the math, right? Like, what is that? Like, what is that, by the way? Someone do the math. We're at 28,000 Bitcoin, right?
Yeah.
Times how many? 10,000?
I mean,
yeah, he's got somewhere in that region.
Oh, so he's a 280 millionaire?
Yeah.
No. Yeah, 280 millionaire on Bitcoin alone. Okay. So if you think about it from a marketing spend, you're right, Jarrett. If he just spent $1 million on this bet, and it's a legit bet, verified through the blockchain, which I think it is, like, he's set. He gets all the followers. He makes all the rounds. He never launched a book. He just put his money where his mouth is. And he'll give away that $1 million and have onboarded tons of people.
Yeah, and I mean, the thing is that he just needs his portfolio to go up, 1 or 2%, and he makes up his $1 million. He doesn't he doesn't need Bitcoin to even go up that much to make up for the fact that
I didn't think about that.
He lost.
I didn't think about that. That is nuts. So, I mean, so where are we going to be? So I was just looking up the definition of hyperinflation. And back of all of this is everyone's hyper fears about hyperinflation. Hyperinflation being defined as inflation exceeding 50% in a given measurement, mostly months, but sometimes it can exceed days. Do either of you feel, Aussie, you were hitting me with some economic data that said there's just no way we're hitting hyperinflation. What was some of that data?
Well, CPI, if you look at the CPI data as far back as December, it's really not been, it's been trending down. Is it trending down steeply? No, but we've dropped from a year over year of over 7% to 6% now. So that's a pretty significant drop. It's not, it's not standard 2%, but you're still down 1% in over just under 3 months. So
translate that for layman's terms. We got some 7 followers, 8 followers, 6 followers, 7 followers. We got 7 people watching right now. Let's pretend one of them had no idea of how CPI correlates to inflation. Like demystify that real quick.
So CPI is an economic measure of basically the change in price of consumer goods, consumer products. Mm-hmm. So it's a basket of goods that's made up of food, housing, a whole bunch of different services, like even pet food and pet services, finance services.
Because pets are people.
Yeah, pets are people. Just about a general measure of the economy and different things that people spend money on in the economy. How much you spent to have an accountant do your taxes is semi considered as a portion within that basket. And all of those products and all of these services are all kind of put together and weighted within this measure called CPI. And it measures how much change there is in the price of these services month over month and year over year.
And so, for example, if inflation goes up, CPI goes up.
Yeah, and CPI would be positive.
Got it. And so CPI is trending. If CPI is trending down, then that means inflation might be staving off a little bit, right?
Exactly. It's saying that from this time last year, overall, the price of the goods within this basket have
Mm-hmm.
only gone up on average 6%.
Got it. Got it. And so, okay, so hyperinflation, doom scrolling is really bothering the crap out of me right now. Like the fear mongering is nuts. What is legit in either of your opinions of the fear of the market? In your
I mean,
opinions.
so if we think about it from a crypto perspective, I think the fear about how do I get fiat into crypto
Yeah.
if I'm a US citizen
Yeah.
and live in the US, that is a legitimate fear.
Mm-hmm. Mm-hmm.
Moves that we've seen towards banks around crypto, Signature Bank, Silvergate, and Silicon Valley Bank have all shown, hey, bringing fiat in from the US into crypto, we don't like that. We're not about that life, apparently.
Boom, our
So,
gal.
hey,
What's up,
Allison.
Allison? Good to see you. I hope everything's going well over there. So the onboarding is the fear in America. Now, you specify America, you're in Canada. Do you have access to onboarding sites, swaps that we don't? Like, can you get on Binance Global?
I'm on Binance Global, but the one thing that I don't have access to in Canada, and I've actually had this discussion with Jarrett before, is I can't deposit, at least on Binance Global, because of the province that I live in, I can't deposit directly from my bank account. You can't actually do that from most Canadian banks.
Interesting.
They basically block it. So
And
you're
Jarrett, while Aussie's talking about this, Jarrett and Allison, if you're still lurking, I want to hear from the UK. What popular sites are you not allowed to access directly from the UK? And Jarrett, you're in Colombia. That would be very interesting to me. Go ahead, Aussie. You were talking about other access or other onboarding.
So you can onboard mainly through P2P. So I can basically, we have a system called, that's kind of like Venmo, where it's Interact e-transfer, where I can send money from my bank account to someone else's bank account, and that via Binance, and essentially have them release or send me USDT from their Binance account to my Binance account. So, and a bunch of people make a bunch of money doing this. Basically,
Yeah.
the people who want to offboard their fiat, their crypto, will sell to these guys for a discount, and then people buy it from them for a premium. Only a 1 to 2 cent spread, but still enough with enough volume. So
yeah. And any nuances like that in Colombia that you're aware of, Jarrett, if you can hear us right now?
Yeah, hopefully you guys can hear me. I'm just having crap internet problems right now, but that's life. So in Colombia, it's P2P on Binance, and then Coinbase is pretty straightforward. You're just buying from the exchange, and Coinbase is pretty high fees. There are other platforms, but a lot of them have died in the last like 12 to 16 months. I just think the market crushed them, and so they weren't able to probably cover their liquidity. So that's how that goes. And I actually want to go back if we could, and I want to talk about the hyperinflation. Like obviously when you get to 50% hyperinflation, when you get 50% inflation month to month, that is crushing. Like your country's done at that point.
It's done.
But I think we're in a situation that's more like the analogy of the frog in water that's boiling. And I also want to call out that that's actually not a real thing. We use that all the time, but apparently that's not a real thing. The frog in the water.
It will jump out.
Yeah, you put it in boiling water, it's going to jump out. But the point is that I don't even think you need to get to 50%. I think if you're at 5% month on month inflation, that's like having hyperinflation in the US because we're not used to that.
For sure.
I'm saying month on month over a year to 60%. That would crush. And it goes back to the conversation I feel like we constantly have here where I guess I'm being the optimistic and Grant is being I'm being the pessimistic and Grant is being the optimistic or the optimist. But it's like, dude, shit is not okay in the US. Shit is not okay around the world. People are really freaking hurting. And I know that you'll go back to what you said, and you're totally right that, yeah, we're not seeing the lines we saw in 2008. Well, you can also apply online now. And people are doing gig work where they have a job, but it's really just getting them to the next paycheck. And so I think even at 3 to 5% inflation month on month, that would be like having hyperinflation in the US or in you know, if that was the case with the European Union, they would be in some serious issues. So if you're just going to look at the global north, the global north needs to have a tenth of what the global south has to really find itself in a serious issue. And a lot of that is just that people in the global north just have way more debt than people in the global south.
Yeah.
I mean, even the United States is like 2 2/4 more debt than we do have GDP. And that's just insanity. You know, if there was a bigger nation with more nukes that called our debts, we would be a developing nation in 2 days. So if we can't print money and somebody called us on our debts and Thanos comes down, you know, and says, hey, where's the money? Well, hopefully we have the Avengers. Otherwise, we're pretty much shit out of luck.
Do you think we're that flimsy of like, do you think the system is that frail?
Yeah, we just saw banks go down because they bought government bonds thinking it was going to be a good thing. And then when people said, give us the money back, they didn't have them.
But,
so, yeah,
but that was a system.
Really
but now that we know that Jerome Powell, the Fed, and Yellen and the Finance Committee all knew that pressure would shut those banks down, it was like a year and a half long turn up the heat. It wasn't overnight, and it wasn't just the bank balance. Like there's been artificial raising with intent, I believe, to shut down the bank. And so to me, that shows a kind of a resilient system that the heat turns up. It was like, I think the numbers I saw, and correct me if I'm wrong in the public, please correct me if I'm wrong, but the numbers I saw was in December. They knew it as far back as December 2021.
Who's they?
I think Jerome Powell himself had it as one of the papers as a footnote in his report to Yellen and the Finance Committee. I'm butchering the titles of these committees, but that's where we're getting the information from. And they started reporting on that as far back as December 2021. Throughout 2022, they kept getting these footnote warnings of like, these banks, but we believe that it might be banks that are associated with cryptocurrency onboarding and on-ramping that might be da-da-da-da. And so my point, though, is about flimsy and frail versus not. Sure. I do believe society at large is a lot more, is held together by shoestring more than people realize, just decency. But in terms of like a resilience against an out-of-control Fed, in my opinion, it shows resilience to me. But you don't think so?
What shows resilience? Can you I really want you to be specific about what you're calling resilience.
The endurance of over a year and a quarter of resisting, not failing, resisting active Federal Reserve rate hike action against their which basically had negative impacts on their portfolio, and holding out for over a year and a quarter against that action. Raise after Fed hike after Fed hike after Fed hike, and they still didn't collapse earlier. So if their portfolios this was mismanaged portfolios, well, wouldn't it have collapsed far earlier? And so that's a question I don't know. I'm not an economist. There's smarter people watching today. But let's actually, if you don't mind, the impact we're talking about this because we're talking about the impact on crypto. And Allison, for those who are just now jumping in, she just mentions that she used to use Binance, but today had to find new resources. Binance will stop accepting the pound as of May. So this is an action by Binance, not the UK.
No, it's spurred by an action in the UK. So this is something
interesting.
Several banks in the UK have basically said they're no longer working with Binance.
Interesting.
Or not allowing people to buy crypto with either their debit cards or credit cards. So the biggest banks, HSBC in the UK, made that decision. And then they are discussing legislation of only allowing people to buy so much. I don't know if it's CBDCs or stable coins are put so much into crypto every month within the UK.
Interesting.
So that's been a discussion that's been going on. I don't have all the finesse details, but
yeah. So Allison just gives you a thumbs up there. She says that's right. Now I was asked on Twitter, and I asked you guys in the WhatsApp conversation we're having, that I was asked by Vic E. She's a new follower on Twitter. She said, "Hey, with Silvergate and SVB going down, if these are the kind of the bankers of on-ramping into crypto, what are other crypto resources?" I would have thrown people at Binance, at least Binance US, all day long, Binance Global. But like, what other, and I mean on-ramps, Coinbase, Robinhood, still, yes, believe it or not. And then you guys mentioned another, crypto.com. But what other fiat to crypto on-ramps are there?
MoonPay.
I was
But
thinking about MoonPay.
I think MoonPay works, and there's a couple others that might work, but they're more finicky from what I've learned.
Jarrett?
Yeah, I was gonna say there's Swan for Bitcoin,
Swan,
and then
that's
you
right.
can buy Bitcoin right now or you can buy certain cryptos on Venmo, PayPal,
That's
Cash
right.
App, and Square, which is now
Yes.
Block. So there are a good amount of on ramps in the United States, and I think that I don't actually know the exact specifics around what's going on with the UK. Allison says she used MoonPay today. I don't know the exact specifics about what's going on today right now with Binance in the UK, but they may get Binance.uk, which is something that is a lot more regulated, just like the US got Binance.us. When I first bought crypto back in the day, I was using Binance.com, Binance Global. And then one day you went on and you had to create a whole new account. And you basically had like 2 weeks to move your crypto over to that new account. And I actually still have crypto on my Binance Global, but I can't take it into any on-ramp in the US. So if I had a bank in Europe, if I had a bank in Spain, I would be able to take it into that on-ramp. Justin Tate says, I'm trying Juno mainly to get crypto off, but I think you can get it on as well.
Interesting.
Yeah, I haven't heard of Juno. And I'm going to just say, Justin, that make sure you do your homework, because the way that you just said that was the way somebody once sold Voyager to me. And I'm glad I never touched it. So,
well, I mean, and to be fair, Justin Tate is the maverick of our Discord. He's Mr. Research. Like, this guy is Mr. Homework. He was talking to me about curve yields and stuff before anyone. I mean, like, he was the OG as far as I'm concerned. But you're right. Like, there's a lot of goofiness, and it's sounding like these things can shutter at any time. And, my response to this Twitter user was, listen, there's dozens of on-ramps, but like, we literally only named about 5. And that's, if this were a business and I had 5 clients that represented all of my business, that is called a risky business in terms of being able to on-ramp and off-ramp. What services do you guys know? Let's say everyone acted right now, took up Balaji on his $1 million bet, got into Bitcoin, crazy inflation, maybe not hyperinflation kicks in, crazy inflation kicks in. They've got their Bitcoin, it mooned, so now they're sitting on way more money. Everyone else is brokies. Do you know services that are easy to use with a debit or credit card, where they could get their money off and pay for things?
There is Spritz Finance is a new one where you can pay your bills via crypto.
Interesting.
So it takes 7-day settlement. So it isn't an instant with your credit card or your debit card payments, but you could potentially pay make your mortgage payments with crypto through Spritz Finance.
Did I spell it wrong? Brits or Spritz?
Spritz. Spritz Finance.
I love Zed.
Me too. I love it. It's so cute.
It's such an affect of you UK Commonwealth colonies. That's so funny. Yeah. So Spritz Finance. That's a great resource to hear. And of course, I mean, Coinbase, you've got the debit card. Crypto.com, I believe, has a debit card. But like, these seem like they seem like if anyone's going to come, the lockdown is going to happen. It's going to happen with them, because they're playing nice with the central government,
They aren't. So something very interesting is Coinbase is talking about moving overseas because
Stop it.
Because of the regulatory uncertainty in the US. You can catch it there first. We covered it on Decentralized News yesterday.
Okay, check it. Decentralized News from Aussie. Say shameless plug. Go for it. So you did cover it on the episode yesterday.
Yeah, and it's very recent news, but they're talking about moving overseas because of the regulatory uncertainty.
Interesting. What, Jarrett? What are you about?
Brian Armstrong can always move into SBF's old house in the Bahamas if he's down. So
I'm sure it's empty. Yeah. As with Epstein Island. So Justin Tate says, true, he uses Gemini and Binance.us. I forgot about Gemini. Gemini's still around.
Gemini is another one, yeah.
Gemini's still around. So we do have a good half dozen. And I do know the Winklevoss twins, who are the Gemini heads. They are not trying to necessarily assuage regulators. So they will hold out. Of the ones we've listed, and this is news to me about Coinbase, but of the ones we've listed, I feel like Gemini actually is the one that will hold out the longest in terms of keeping its doors open to U.S. Crypto traders. Maybe MoonPay. MoonPay seems kind of unbiased. Go ahead, Jarrett.
Well, if Coinbase goes abroad, it doesn't mean that they're not going to be playing with the U.S. regulators. I think that they could still offer services, right? Or you're saying if they go abroad, they wouldn't offer services. I mean, I just don't see how Coinbase is going to step away from the U.S. market with our middle class. I don't see how that works. So,
well, I mean, no, I agree. I'm saying when they step away from the U.S., most of these organizations, like I remember Gate.io, I think it was, it's a decent onboard. And at the time, I did have to use a VPN. I did have to do a KYC to get anything done. But there was a workaround that was kind of an obvious workaround. And they're kind of like, are you American? Whatever, make your deposits up to this amount and you're good. And then I would roll that money right into like for Cardano ADA into Yoroi or, my Ledger Nano or something like that. So what is so funny?
I just laugh about your Ledger Nano because I just still think it's ridiculous that you carry that thing everywhere you go.
It's right on my desk because the average person just won't even know what to do with it. Like
it looks like a USB key.
It really does. People won't know what to do with it. It'll even say, it says resilience by design. They will even look at it and be like, they won't look at it and think there's money, right? Like the average person look at my desk and they're like, okay, what here is money? That USB device, get out of here. So are you guys worried at all? I mean, we're talking about this. Are you guys worried that this is actually the crypto apocalypse for us in terms of onboarding and offboarding? I think we're going to make good money, like honestly. But listen, they will know now. I seriously doubt the criminals breaking into my house in this neighborhood are scrolling through my YouTube and
you want if they know you live there and they know you're a YouTuber, they just might.
Yeah. So are you guys worried about onboarding, offboarding, and regulation?
Onboarding and offboarding in the US? Absolutely. I have no clue what's going to happen to you guys. And if you guys are going to be CBDC bound for the rest of your existence.
You still think that that's imminent?
I mean, it's not happening tomorrow. Is it happening 3 to 6 months? Absolutely. The Fed has been hiring developers to develop it.
I just saw Jarrett's face and I had to listen again to what you said. You said 3 to 6 months we could have a CBDC?
Yep, without a question.
What are you talking about?
The Fed's been hiring developers to build a CBDC. There's been postings. You can see them. They're looking to hire, and they're hiring.
I'm thinking like legislation alone. The groundwork for legislation has to even be laid still, right?
3 to 6 months is really, really fast, Aussie. You've got August. No one works on Capitol Hill if they can avoid it.
That's true.
That's going to be toward the end of your 3 to 6 months. DeSantis, soon to be presidential candidate, has said he does not want the CBDC.
Has he said that?
Yes, he came out today.
He's trying to ban it. He's trying to ban it in Florida.
He came out and said that today. So I think 3 to 6 months is aggressive. I think in the next 24 months, you're definitely going to see some huge movement with it. I think it really depends who comes into the presidency. If it's DeSantis, he's obviously going to never let it happen. He's going to sign an executive order. So I really think 3 to 6 months is a very short timeline because just legislation alone, like there's a lot of things that are proposed and they get a lot of fanfare and they get a lot of headlines, but all of them are DOA. They're dead on arrival. They're not going to go. The Congress is so tight and the Senate is so tight in the United States that they like to just take pot shots at each other. And so even if something's really great for everyone, they're like, no, they put it up. So we hate it. And it's just gridlock. So I really don't think that's going to happen. I know that that's been a lot of the fear that they're going to start to control us and we're all going to be on CBDCs and, not Crypto Bros is going to get shut down. My wallet's going to get banned because I say the government's flimsy and the bank system's shit. But I'm not really worried about it. And I don't think we should be worried about either the on or the off ramps because at the end of the day, there are very, very wealthy and powerful people that are into crypto.
Yes.
Fidelity is into it. BlackRock is into it. Like
high.
they are not going to let this just go quietly. I don't know the amount of lobbyists that are currently in DC that do crypto, but it will be 3 to 5-fold in the next 24 months. This is not going anywhere. And if the United States steps out of crypto, we're basically stepping into the Stone Age. And there's enough people in Capitol Hill that understand that I don't think it's going to happen. So I think this is fear. This feels like another telenovela day where everyone gets their panties in a twist and excited. But like, let's zoom out and realize it's probably going to be okay.
Yeah,
Jarrett's panties are obviously in a twist right now.
No, he's
a deep twist.
Yeah, exactly. To give you an idea, crypto spent $22 million on lobbying last year, which was a doubling from 2021.
Who was this?
Crypto companies.
Oh,
crypto as a
large.
whole. At large. So, I think, do we see 2 to 3-fold in the next year? Probably. And probably, again, continue to see that number double and double and double for the next 5 years, for the next foreseeable time. But I do still see there's more and more willingness or interest in trying to narrow and control how that money gets on or gets off.
I do see that increase, definitely.
And so you mentioned Fidelity, Jarrett, and yes, they're into crypto, but it's all them controlling the crypto. It's not, you can't withdraw. Like Fidelity Crypto just rolled out like yesterday or 2 days ago.
Really?
Mm-hmm.
Yeah. But it's all their control. It's not your keys. They're all centralized exchanges. They're not
exactly. But it's a really good case study of a TradFi that's able to basically become a Coinbase. And because Fidelity is one of the most known companies, probably the world over in investments, they're going to be able to already have the ins to be able to talk with Washington and the lawmakers to be able to basically speak their language. I think when you have Brian Armstrong in front of Congress, it's different than having the CEO of Fidelity in front of Congress talking about these things. One is a crypto bro. The other one's a TradFi who's trying to be open to a new digital asset class. So I'm not, this just goes back to, I'm not worried about it. And I think it makes great headlines, but people shouldn't like really freak out about. What I think we should really talk about, and I don't think you guys weighed in on it, is because we're talking ridiculous timelines. Do you guys think it's possible that Bitcoin gets to $1 million in 90 days?
Not 90 days, bro. Not 90 days. I mean, like, I have been massively impressed. And to the public watching, if you're watching, you probably are equally impressed at the bump from 16,000 to 28,000 that came. And I think the three of us can agree there was some correlation to a capital flight from TradFi in fear of what's going on in the market into at least hodling in the crypto space. And the reason I say hodling is if this were an actual market move, I think we would have blown through 30,000. Like when we know, the three of us know, and those watching who are familiar with crypto know that when there's a breakout in our space, like it is a nutso breakout. But this breakout, in my estimate, is actually kind of conservative. It's been impressive. People are like, oh, you guys look like geniuses. And it's like, well, it's been 2 weeks. And it's gone from like 16, 17,000, 28, but it's like hovering. And any of us know, hey, we're cool. It's probably going to pull back, and that's all good. To me, that's people moving money and sitting on it and like waiting to see when they're going to put it back into a stable TradFi. But they're not. They're probably staking. They're not like trading. It's not like high trading volume, if that makes sense. Now, Aussie could speak to this a little bit better. Go ahead, Aussie, because Aussie has trading bots and he pays attention to volume. Can you speak to volume?
The volume has recently, so in the last, I'd say week or so, been ticking up. Volume for most of February was, for the second half of February into the first half of March, was crap. Absolute garbage. it was garbage through December, and then the new year started, and volume started to come back again. We've seen spikes in volumes like here and there, but not. I wouldn't say to a point where we're talking like we were seeing in the last bull run.
Yeah.
We see spikes in volume here and there,
Yeah.
but not. It's not sustained higher volume. Like I can say, like this week, since basically the banks collapsed, volume's about doubled.
What, Jarrett?
I just love that that's like a thing that Aussie says without
A
losing
normal
any sweat.
sentence.
Hey, since the banks collapsed.
Yeah, since the bank collapsed, the big bank collapse, we've essentially seen a doubling in volume, like on average volume, and then some spikes have gotten pretty significant, like much higher than that, but a doubling, getting close to almost tripling in some cases in daily trading volume compared to a few weeks ago.
Interesting. And I guess when we see a full bull run breakout, I feel like the volume on the ledger books is like significantly higher of the inflows and outflows. And to me, it feels like, just my intuition, just my humble opinion, to me, it feels like this was correlated to a capital flight, and that's okay, and it's proving its case. But the long-term hodlers are like, hey, it's going to do whatever. And it does, for me, it bolsters my confidence that, dude, it could pull back to 16. I don't even care. Like, in fact, if it does, I want to buy more because we're going to see more banking issues. We're going to see more inflation issues. And we're now proving that there's like, it's like a hidden pocket. Like, I don't even know how to describe crypto. It's like, you know how when people eat so much, they're like, I'm going to put it in my other stomach, and it's like, when did you get another stomach? It's just this weird phrase they say. We didn't, it's like having an extra wallet that they didn't have before that's kind of perceived to be untouchable by these government powers. So while it's unstable, let's just move it over here and let's let it sit, and then we'll move it back in. It's like another chess move that the average retail trader has, or the retail banking client has. So do I think it'll hit 1 million in 90 days? No way. Could it rally and shock us? I think we could be shocked if inflation gets out of control if we approach the magic 40 number, right? That's a number that Jarrett and I are watching for our fund. I mean, it's just stuff we're kind of paying attention to. Like, hey, this would be a great number if we could put money in a pile for people and let it hit that number, because the expected return on a TradFi fund would barely scratch that, but we know like it could hit 40 without blinking if the market just turns right one day. Like if it rains right in Africa and this thing happens over here, like Bitcoin could just show up and be at 40, and we've done really well. So I think we could see some surprising numbers. I don't think we'll see 1 million. No way. Go ahead, Aussie.
I see the year closing around 40 to 50. I have a hard time saying 50. I think we close around 40 for the year. For the year, I'm seeing maybe that 30 number that you're talking about, maybe we hit that before the end of the day tomorrow when Jay Powell speaks. But I've got a feeling the market's gonna maybe be shocked or disappointed when they hear him speak tomorrow. And
really,
we're gonna see the market pull
a half
back.
point. You're gonna see a half point.
No, we're not gonna. I don't think we're gonna see a half point. I think a half point, that's not on the table. We'll see a quarter point, but the entire market is it. Everyone's expecting this month, last one. We're done. We're going to be talking about cutting rates as soon as June or July. That's what all the forecasters are saying on CME right now.
Oh, so people are going to get depressed because they're lasting another quarter at these rates, and they're not going to start cutting now. So, okay, I see.
Well, and so that's the expectation right now, is we're going to start cutting in June or July.
Interesting.
And now I'm thinking he's going to say, maybe we're not done. I'm going to say maybe there's another quarter basis point. Maybe he doesn't firm and say, yeah, we're done. We're pausing. Yeah. We broke the banking system. We need to hit pause. And he's not going to hint that they're looking at cutting rates.
Interesting.
He's going to be. We'll be looking at holding rates for a sustained period of time, and potentially and likely hint that maybe we don't see cuts before the end of the year.
That's we'll
I think
call
the market,
Aussie the Canadian Oracle of America, of American Federal Reserve, man. He's got it on lock. Yeah, Jarrett, so does that scratch your interest? I mean, I don't see it. Yeah.
I mean, Powell originally said that they weren't going to cut rates until 2024. So for him to start cutting rates in June or July is pretty crazy, which I just think we're going to see. What we've seen is that they're going to protect the banks, and they want to probably avoid a situation where they have to protect more banks. So they're going to probably pause. And then, as Aussie says, maybe cut rates. If they do, okay. But then we're going to have some crazy inflation. And I think we've already had at least the craziest inflation maybe I've ever seen in my adult life. But I just think we're going to see some crazy inflation.
Even beyond.
Yes. Well, you have two ways. You either crash the economy or you get inflation. And he's decided he doesn't want to crash the economy because of what happens if people freak out and if banks aren't secure and people are going to be running all the banks. So they're going to go for inflation. That's the only other way they're going to do it. And if they start printing, mark this, somebody write this down. If they decide to do quantitative easing, they turn on the printer more than they already have because they put $300 billion on the balance sheet to help out SVB. If they turn on the printer, though, to the tune of trillions before 2023 is over, just people are not going to be able to handle when Bitcoin hits 300,000 in 2025 because it's just going to get out of control. It's already out of control, right? The system is already broken. When you are stuck between inflation or the recession, you're already, you have no good move, right? So I don't really know what's going to happen, but the system is definitely broke. And I think it's becoming more apparent to not just people like us that are looking at the market, that are, into crypto, into an alternative financial rail, but like so many people have talked to me over the last 2 weeks because they know that like I'll post about Bitcoin or post about the banks, and they have no idea. They just have no idea. They have like their 401ks, they have their mortgages, and they think that's going to, keep them okay. But like, maybe it actually will, but the prices that they're going to end up facing at the supermarket and at the gas pump are going to get out of control. And like I'm saying, and like we said, even if it's 2%, right? If it's 2% a month inflation, that's 24% on the year, if not more, if it's like compounding. So like the average American family can't handle this. Never mind many people in the global South. We're going to continue to see like serious issues over the next couple of years brought on by this ridiculous situation that honestly the United States has kind of put everyone in because we are the reserve currency. It's not good. We are like what happens in the United States affects other places when it comes to our monetary and fiscal policy, affects other places 2 or 3 to 4 to 5 times worse than it affects us. Because we can print, we can bail ourselves out, right? Other places don't get bailed out, So I'm cautiously optimistic, but I think what we should do, if we're looking into Darwinism, you should let some banks fail. That's how this should happen. I think you should probably help out the depositors, but I don't think you should be able to acquire a bank for $2 on the share. Absolutely not. That bank fails. That thing's done. It's under. Because all you're doing is creating this Russian babushka doll situation where you're just going to have 4 or 5 big banks in the United States, all the small banks, all the community banks, they're all going to be gone because people are already leaving them now to go to Bank of America, to go to Wells Fargo, to go to Chase, to basically knowing that those banks will be FDIC insured at the end of the day because they literally are too big to fail. We learned nothing from 2008. The Republicans have totally rolled back. They rolled back with Trump, the Glass-Steagall Act in 2018, and that's how we get here. Being able to make ridiculous decisions and having really like no like fiduciary responsibility. That's ridiculous. I'm done. I'm done with my TED Talk.
So you created this dichotomy of the difference between recession and inflation, and that fact that these are the extremes on the spectrum are a sign that the system is broken. I think I have to come against that. That is every system, right? Those are the extreme potentials of every economic system.
I'm not sure of every economic system, but those are the two options that the U.S. currently has in front of them. And those are the only two options.
I think I kind of agree for the U.S. Like Canada, the banks aren't breaking. Our banks are working fine, and we're just to the north of you, and we've had inflation just as bad as you guys, or maybe a little bit less, not as bad, but close to it, and we're not having any problems. The economy in the US is on such a shoestring that either they keep hiking rates so that inflation comes down and they keep breaking the system, like they've started breaking the banking system. Although Signature Bank, tinfoil hat, Signature Bank was fine.
That's a Clinton bank right there. It's a New York bank. That's a Clinton bank. Tinfoil hat, people, relax. So Aussie, what do you think is the distinguishing factor, just in your microcosm, the difference between Canadian banks and American banks? What is the defining factor that you think is different that makes it, well, there's no banking crisis here?
Well, I think there's banks are working to make a lot more money off money within the US. So there's in Canadian banks, I think there's the risk management is just a lot smaller. Like there isn't as much leeway, I think, for decision making on banks, and we don't have as many small banks. We've got about 6 kind of big banks and a few smaller online banks. We don't have a massive variety of banks. It's basically you go to one of the 6 big banks, and then maybe there's 8 to 10 kind of minor banks or regional banks that exist in Canada.
Stupid question here. And Jarrett, cut me off if you have thoughts on any of this. Stupid question here. Are Canadian banks on a fractional reserve system like the U.S. says supposedly, even though we're on zero reserve? Do they have a fractional reserve system?
I actually don't know. That's I'm literally Googling this right now.
Yeah. That's curious. Jarrett, go ahead.
No, I was going to say, I just assume on some level they must have a fractional reserve system.
I mean, because
I was just going to say, if you want to like understand how broken the system is, the fact that like banks in the US have stocks is mind blowing to me. That you basically can take a financial bet to see which bank is going to work. And so therefore the bank has to basically get stockholders their money, boost stock by like having returns. That's just like in no sound system should the banks have a stock. That just doesn't make any sense.
What? Okay, this is new to me. Like, do other countries limit that?
We've got bank stocks in Canada.
But I mean, even if you
do, I don't care who has it. I'm saying I think it's a broken idea.
Oh, okay. I didn't know if you were referring to like, well, Nordic countries, they don't allow stocks.
No. I'm just saying like in theory, like philosophically, I just think that's a really broken thing.
That's
it's a really messed up thing. Yeah.
Because
listen. If you and I have a company, the 3 of us have a company, and we make water bottles, right? And it goes public, right? Yeah. We are supposed to be getting for our shareholders the max amount of profit we can. Like that's our responsibility. We want to get you the most we can. So if I'm the bank now, and you buy the stock to the bank, right? But Aussie puts his money in my bank. I have no responsibility for him for his money. I only have a responsibility to get you more money because you bought the stock. Does that make sense? He just gives me his money, and basically it's an IOU. And if I give it back to him, that really depends. But for every dollar he gives me, I'm going to lend out 19. I mean, that's at least how the fractional reserve system works. So I just think having an incentive for a bank to make profit is really dangerous. The bank is just supposed to be there to hold our money and give it back to us when we want. It's not supposed to be profit driven. It's the same way with like our healthcare system. The healthcare system should be set up to provide healthcare and support citizens, not make profit. But in the United States, everything has to make profit or it doesn't make sense. But that is flawed. That is inherently flawed, in my opinion.
I'm going to back Jarrett up on this because I totally agree with him. As a Canadian, I have free healthcare, although we do have some private healthcare. So dual system, not very great. But I totally agree, because you see it in how the banks behave. I see it in how we get client service in Canada. Just pushing products, increasing fees. Like the staff at the bank that's near my parents' house, 90% of the offices are empty now, and they're consolidated to a more regional office in a bigger town, 20 minutes, 30 minutes over. So I think banks, that's all because they're trying to cut costs, make more money for their shareholders by upping the fees that they're charging me for keeping money. I'm getting charged to keep money in the bank. Like you're making money on the money that's in the bank anyways.
No, I do think that's crazy, but so Jarrett, just to be clear, you're talking about a government banking system, a subsidized one.
I'm not talking about a government banking system. I'm talking about a banking system. Excuse me. Talking about a banking system where the bank is just as responsible to the depositors as it is to its shareholders. And that's not how our current system is set up. And I think that that's totally messed up.
In your water bottle example.
Sure.
Because that was the metaphor. And I do agree with that metaphor. You have a stockholder, a shareholder, and you have a client buying a water bottle. In the bank, you have a shareholder and you have a client acquiring money and money vehicles, not just deposits, but also loans and financial things. And the impetus and the idea in the free market is that if I provide crappy enough service and crappy enough products that do not benefit that person, then they'll take their business elsewhere. I think the flaw in America is that the federal government is involved at all in the banking other than regulation, meaning the Federal Reserve. I think that's a problem, because the perception is that the bank is a government institution. And so we feel like we have to have it. I have to deposit my money here. I kind of need it. And it's like, well, no, you're not a necessary part of society, especially now that we have cryptocurrencies. But more importantly, like local banks, they usually have to fight tooth and nail to get deposits because I can't take my debit card all around the world. I have to have a Visa card. So I think the perception of the bank is what throws me off. Go ahead.
So I have a small bank in Massachusetts. It maybe has 15 branches, maybe. And I have their debit card, and I bring.
I think we lost Jarrett.
Platform. But I use that all around. The only way they can compete with big banks is they give me free ATM fees. So they basically reimburse all my ATM fees. I guess my problem is I just don't think, I agree with you. I don't think that, I think the government should let the banks that fail.
I agree with that.
Because then you're not going to go back to those banks. This is exactly what you're saying. In an open market, I'm going to say, okay, me as the depositor, I'm going to be like, why would I go to that restaurant? It made me sick. I can choose to go to the other restaurant, and eventually that restaurant goes out of business, right? Yeah. The government doesn't come in and say, oh, Bob, we're here to help you out, right?
Yeah.
And so when you start to do that, and because we print the money, we inflate the balance sheet, and we're going to eventually, we're going to hit inflation that way. So I think I don't know. I just go back to the idea. I think it's asinine that there are stocks in the bank, because then you're basically betting on which banks are going to make the most profit. And then those banks are there and they're incentivized to make more profit, not just make a little bit of profit and make sure that we're keeping everyone's money safe. So if they come and get it, we can give it back to them or sell our gold or sell whatever assets we have on hand to make sure that there's not a bank run.
Interesting.
We have it's just like in the healthcare system in the US, the fact that there's hospital administrators, right? You shouldn't be in a hospital unless you can do CPR and save someone's life. If you're not, then you're just hanging out. You're just a bro. And so I have serious problems with the way the US sets up its entire structure to help people, because how people, if they're healthy physically and if they're financially healthy, those are two really important parts of people's lives,
Interesting.
And most people don't have these conversations, and they're not thinking about this. They're just going to go put their money in a bank, and they have no idea what's going on. They're like, no, don't worry, it's FDIC insured. Well, Janet Yellen has come out and told us that doesn't matter, because unless your bank is big enough to cause a systematic issue across the U.S., well, we just may not be bailed out.
If
So
your deposits exceed 250,000 is what he's saying.
if your deposits exceed $250,000, or you've taken a loan out against your house or whatever it is. So either way, I do know that we want to end this a little bit earlier because Grant has some business to do this afternoon. So we're going to give him a little bit more time.
Shady dealings.
So with that, Austin, I'm going to throw you any shout outs you have other than Jerome Powell, your boy.
Yeah.
my boy Jay Powell and my buddy Gary. I want to shout out Allison for coming and joining us last week.
Yeah.
And then I want to kind of give a shout out to Nick. So Nick Stobe, he's awesome. Really good, really smart guy. He tunes into all of our episodes. And so I want to give him a big shout out.
Great. Shout out real quick to J333. We didn't get to your comment. We do agree. I do agree with this personally, that the banks are only as strong as people that have faith in them. But thank you for your comment. Sorry we didn't get to it sooner. And shout out to the people who are educating themselves. I think, Jarrett, you just made this point. The people don't know. And I am what I would probably call an OG constitutionalist, a strict constitutionalist. I do believe the Constitution should change. I do believe it should evolve. I do believe we can get rid of some old amendments and stuff like that. But I am a firm believer in the spirit of it. And the spirit of it was that we had an intelligent constituency. And too many of these systems are set up, paternalistically. And so I have a shout out for anyone who's got the chutzpah to maybe get into crypto because of many reasons. But what you're really doing is becoming a sovereign citizen on your finances, because you have to learn about the responsibility of self-custody. So not just about crypto, but about financial freedom in general. So my shout out is for those who are going out of their way to have a greater understanding of financial stewardship, aka financial freedom. Jarrett.
Yeah, shout out to Justin Allison and J333. I agree with your last comment here. The Fed knows the banks are not managing the risk properly or appropriately. They knew that the rate hikes would drive their bonds underwater. They did. They drove the rate hikes because they had to. Right. Once again, it was either inflation or it was recession. So they went for the recession. They started to get a taste of that, and then they went back towards inflation, I think. So either way, shout out to everyone in the comments. We're here every Tuesday at 3:30 Eastern.
Yeah.
And you can find us on YouTube at Not Crypto Bros, on Twitter, and on LinkedIn. Reach out if you would like to guest, or I don't know,
or if you know someone sharp. We got to talk to a super sharp person, Allison, last week. We're going to bring Brian Naughton in as soon as he's available. But if you know of someone super smart that can school us in the wise ways of being badassery in crypto, let us know. And thanks so much, everybody. Have a great afternoon.